I am going to show you how I took a trade that gave me over 400 pips on gold. Now I'm going to take you through the analysis process and the execution. So stay with me as I take you through the analysis. Before I took the trade, I shared the analysis with the community. Now this is a free community. You can join. The link is in the bio. I shared this with them, how I was able to determine the bias, and also when I executed the trade. We had a fruitful communication. So guys, if you want to join, you can join the Telegram group. Link is in the bio. Now, this is the chart markup for the trade I took. Let's clear everything and do the analysis from the beginning. What I do every time I come on chart is I determine three things. One is the daily bias, the second is the structure, and the third is the entry. Now, the daily bias is determined from monthly to daily, depending on the time frame alignment you're going to use to determine your bias. So if you're starting on the monthly, definitely you have to look at monthly, daily, 1 hour and 5 minutes. And if you're going to look at the weekly time frame first, you're going to look at weekly, 4 hours, 15 minutes, and 1 minute. But what I did was I started from the monthly time frame so that my daily candle will be part of my analysis. So let's go to the monthly time frame and look at what the monthly is doing. Here on the monthly, what do we have? We see price have taken previous month high, a previous candle in the monthly time frame, which price have swept liquidity above. So we have price taking liquidity above the month high. So what are we expecting? We're expecting price to react because that is an area of liquidity. And if you learn about liquidity, you know that previous month high, previous week high, previous day high are areas of liquidity. Here we are, the monthly high of the previous month has been taken. So we see price reacting. Now, as soon as I saw this, I went to the daily time frame, and what I have on the daily time frame is that this is the previous month high. Let me drag it, and we see that price has swept liquidity above it. Now, seeing this, I also look at for internal, external range liquidity. Now, this is an old high. I have a video on external and internal range liquidity. If you don't know anything about it, you can go through and learn about it. So here is an external range liquidity in form of old high, and we see price have what? Sweep liquidity above. What are we expecting? We're expecting price to come into internal range liquidity. Where do we have internal range liquidity? We have this fair value gap, which price is yet to fill, even though we see price coming into this level at this point, fair value gap, but price has not yet closed this fair value gap. So this is our overall draw on liquidity because we see this old low here and a fair value gap. So this is the draw on liquidity. Seeing this, I need to know if price is willing to go bearish on the daily time frame. Remember, we're still looking at the bias, which is starting from the monthly and the daily. And what do we have here? We see that we have a fair value gap here. And this is our first line of defense. Why? Because for price to take out this draw on liquidity, a price level must be violated or an institutional reference point must be violated. And we've seen one fair value gap for which it needs to be violated by the price for us to confirm that yes, price might likely go bearish for us to take out this low and also complete this fair value gap. So seeing this, I knew that yes, if this is violated, this fair value gap is violated, I have a draw on liquidity below for price to take. So let me mark the fair value gap so that you can see it. So seeing this, we had last week, this candle is Monday, this is Tuesday, this is Wednesday, this is Thursday, and this is Friday. Now, on Monday, we see price reacting from the fair value gap, and a lot of people were buying. But what also gave me the confirmation was just a pure manipulation because I have this line of defense. And also, the next day, what we saw was that we see price on Tuesday, price close below the fair value gap. Now, we have a violation of fair value gap. And I made a video that, okay, if we see a violation of this fair value gap, we need to see price retesting the fair value gap so that we can have an IFVG, that is inverted fair value gap. And so on Wednesday, we didn't see price coming into the inverted fair value gap, but there is something we saw on Wednesday. Price gave us a what? a fair value gap. A what? A fair value gap on the daily. This was the fair value gap. What I did was I now see this fair value gap as my point of entry to take a trade. Do you know why? Because we have a price range. How is it a price range? Because we see on Monday, we have a sweep of liquidity above this high. Do you see it? We see price sweeping this liquidity. And we have a price range from this high of this daily candle up to the low on Tuesday in the what? In the premium level. We see this fair value gap has some part on the discount level and some part at the premium level. And I was waiting for price to enter into the premium level for me to sell. And during London session, the price did not enter into the premium level. And I told my team that you shouldn't sell this trade because we can see that price is not at premium level for us to sell. So seeing this on Thursday morning, I knew that if price should go bullish, we're going to be selling. And this was my daily bias for the gold. Now let's go to the 1 hour time frame to look at structure on the 1 hour time frame. Here we are on the 1 hour time frame, and let me adjust this Fibonacci because it's too messy. So here we see this was the Fibonacci level, and we're expecting price to come to the what? Premium. And this was the fair value gap created by the candle of Tuesday and Wednesday. So now seeing this on Thursday, we see price started coming bullish. This is because price want to lure traders into buying. What I have a failure swing as a point of liquidity. This is a failure swing, and I was seeing a trend line liquidity. Now, as soon as price entered into this fair value gap, what do we have here? We have a change in the state of delivery at this level. And if we put our price to here, we see we have a change in the state of delivery, and price closes this fair value gap and also retests this change in the state of delivery. But what we're after on the 1 hour is the structure at an institutional reference point. And here we have the fair value gap. We have this change in the state of delivery, which is an order block, and we see price moving bullish. Now, these three soldiers is to lure trader. This is a retail pattern, and you see traders will be thinking, okay, this is going to be bullish because we have three balance, so they will be buying. But meanwhile, we are expecting a bearish trend. And what do we have? As soon as I see this three candle, I said, okay, my structure will come when we violate this 4 consecutive candle. So as soon as price entered this point, this is an entry for others. But for me, I want to see a change in the state of delivery, which is price violating this 4 consecutive candle. And what do we see? During near key zone, this 1 hour candle closed below it. Do you see the close? We see price closing below the 4 consecutive candles. So we have our change in the state of delivery. So what are we expecting? We're expecting a retest, but I want to draw attention. So now, since we have our break of structure on the 1 hour, our entry will come on the 5 minutes time frame. So on the 5 minutes, we see that this was the change in the state of delivery, and we want to be selling at what? At premium level. So if you put your Fibonacci from this level to this level, you see that price is at OTP, that is 62% retracement level. And I gave the group that, okay, we are going to be selling from this level. And then my stop loss is above this high. Then I had 1:4 risk reward ratio. 1:4 risk reward ratio. So we had our TP here. So now, what do we have? We see that price went back into, after selling, we see price going back into a level, and that level was the breaker block, because back in 1 hour time frame, which is the structure time frame, on the 1 hour. So on the 1 hour, we see price returning into a breaker block. This is the breaker block. This is the last second that price violated, and you see price entered into the breaker block, and that gave me another re-entry for me to sell to this level.